of API Plus at Lupin, talking about the quarter gone by and the road ahead. Listen in.
In a general sense, we've done very well in India also. There are certain parts of the business which are not, which therapy areas which are under a bit of stress. And I would actually highlight the respiratory portfolio out there. It's not that it's the respiratory therapy at our end alone, which is under some pressure. It's been across, other, companies as well. The industry as a whole, the therapy area as a whole did not do very well. This is kind of highlighted by the competition as well. But having said that, people were also a little disappointed with, in fact, the overall volume growth in India. So, and I think there is something to be said about cyclicality and the like as well. So I would think, in a general sense, the pharmaceutical market should be growing at least 50% above the GDP growth rate. There's a lot of lack of awareness and penetration in India, which is still a problem. And I think there is a secular growth story to be had over time here.
So the issues in respiratory segment, when this is expected to bounce back?
There's no reason why it shouldn't be bouncing back, because it's not as though that it's disappeared or something like that. It's clearly there. There are a lot of patients out there with respiratory problems and the like. We are clearly focusing on the right things in terms of coming out of the portfolio, which will benefit the patients out there. There has been, of course, a focus on bringing differentiated products. That are triple drug combination that we brought into the market in India. Is obviously a precursor to things to come for the future as well. And clearly, we are placing our bets on the respiratory portfolio for India and for other parts of the globe as well.
On the US business, wanted to know about your, what's the way ahead? What are the products which are in pipeline, and also the key products which you're going to launch in US, like tolvaptan and injectables, when they can become big for Lupin?
Tolvaptan, we have in fact an exclusivity possibility in our next year, in our early part of next fiscal. Clearly, it's going to be a big molecule for us. So that's one part of the story. And the second is essentially the kind of products that we're bringing on the injectables front. So glucagon, Disperdal Consta, liraglutide, some of the names that kind of suggest themselves at this stage. Clearly, we have a pipeline which will take care of the buoyancy on the top line front for America for some time to come.
So continuing on the US business, can it deliver double-digit growth? Because you had guided a single-digit growth last quarter, if I'm not wrong.
Yes, clearly a possibility. So all of these are pretty good molecules. We've got to wait and see. And of course, there is the currency depreciation, which of course has to play out given the geopolitical tensions and the like as well. So we're pretty optimistic about double-digit growth in America in the quarters to come.
So can US become $1 billion plus in revenue by FY26?
Clearly, I think that's story is on. The generic plus the brands bit clearly will exceed $1 billion in our expectations next year.
Talking about the Europe business, which grew 20% for you, what has driven this growth and how sustainable is this growth?
Yeah, you're speaking about Europe. Europe has been doing pretty well on the back of, in fact, the respiratory portfolio that we built for those markets. And of course, you've got specialty drugs like Namuscla also, which have contributed chipped in. So all of this, if you look at the areas, the geographies, the countries that have done very well, we have Germany, we have, of course, UK has done extremely well. So we expect this growth to continue for sure.
So, considering your US business, then your Europe and also India business, will you do a double-digit growth in the next 2 to 3 years?
I think so. Clearly, the potential is there because the kind of products that we are working on and have brought to market also in recent times, a lot more addictive. The price erosion associated with some of these products, inline products, is much lower. And given the products that they're bringing to the market, I think the top line buoyancy can be kind of sustained across all of these markets for sure.
On R&D part, if you see research and development with respect to sales was about 7.7% versus 8.2% in Q2. So are you expecting this to increase in Q4?
Yes, there has been, a lot of this actually has been pushed off into Q4. So I do expect a substantial increase in terms of R&D spends for the next quarter. But in an absolute sense, I think this is very much, on given the fact that we are kind of pivoted away from vanilla products, OSD products, and spending more on complex injectables, on respiratory products, and the resurgence that we're seeing in terms of interest for biosimilars also. So interchangeability is now on in America, and from that perspective, I think the market is about to take off. So given all of this, I would imagine that the absolute numbers associated with R&D is certainly expected to kind of increase.
So, companies' cost optimization has actually helped when it comes to margin uptrends. In the next 12 months, what kind of margin performance you're expecting?
Clearly, as you very correctly point out, there has been a lot of success on the cost front. So the tight leash on cost. Apart from the top line buoyancy, the other contributing factor for margins has essentially been working on the cost front. So every line of the P&L, be it raw materials in terms of alternate vendor development strategies, looking at clean cost sheets, looking at salvaging your solvent recovery programs, looking at in fact make or buy calls when it comes to API and the like as well, and working on further down in terms of productivity of the sales force, or for that matter, the workforce at the factories. So all of this meant that this focus on costs was throughout across the entire value chain. So, and clearly even areas like air freighting, should we not be doing ocean freighting more, the mode of transportation. So and the write-offs associated sometimes with with production inventory. There's been a lot of emphasis on all of this, and clearly the results are there to see. EBITDA margins have crept up. In fact, the overall margins could reflect a much healthier number if you were to knock out the impact of adjacencies which are still making a loss at this stage. So I would be very happy to state that the emphasis on higher margins is certainly on, and you would see better results coming in the quarters to come.
That's Lupin, a strong number, and the stock duly reacting as well now.